Question 1. Which of the following is the primary purpose of the coinsurance clause in a property insurance policy? A. To ensure that the insured shares the loss equally with the insurer. B. To encourage the insured to insure property to its full value. C. To limit the liability of the insurer in case of catastrophic losses. D. To reduce the premium for the insured by covering only partial losses. Correct answer. B. To encourage the insured to insure property to its full value. Explanation. The coinsurance clause is a provision in property insurance policies that requires policyholders to insure their property to a specified percentage, usually 80% of its actual cash value or replacement cost. This encourages policyholders to carry adequate insurance coverage. If they fail to meet this requirement, the insurer may reduce the payout in the event of a loss. The clause helps prevent underinsurance, ensuring that the insured will have sufficient funds to cover losses, while also reducing the insurer's risk. Question 2. Thomas owns a commercial building insured for $500,000. His policy includes an 80% coinsurance requirement. The building suffers a $100,000 loss, and its replacement cost is assessed at $800,000 at the time of loss. How much will the insurer pay for Thomas's claim? A. $62,500. B. $80,000. C. $90,000. D. $100,000. Correct answer. A. $62,500. Explanation. The coinsurance formula determines the payout based on how much of the required insurance the policyholder has. The formula is amount insured, replacement costs coinsurance percentage, X loss amount. Question 3. Mr. Rogers has a homeowner's insurance policy that covers named perils. After a heavy snowstorm, the weight of snow causes part of his roof to collapse. Upon submitting a claim, the insurance company denies coverage. What is the most likely reason for this denial? A. The policy does not cover weight of snow as a peril. B. Mr. Rogers failed to meet the coinsurance requirement. C. The roof was not well maintained. D. The loss occurred due to negligence on Mr. Rogers' part. Correct answer. A. The policy does not cover weight of snow as a peril. Explanation. In named peril policies, only specific perils listed in the policy are covered. If weight of snow is not included in the list of covered perils, then the insurer is not obligated to cover the claim. This type of exclusion is typical in policies that have narrower coverage, which limits protection only to risks explicitly mentioned. The policyholder must check whether the perils listed include weather-related events such as snow, hail, or wind damage. Question 4. In Maryland, what is the primary function of the Maryland Insurance Administration? A. To collect and distribute federal insurance funds. B. To regulate and enforce insurance laws and protect consumers. C. To sell insurance policies directly to the public. D. To determine premium rates for all insurers operating in the state. Correct answer. B. To regulate and enforce insurance laws and protect consumers. Explanation. The Maryland Insurance Administration, MIA, is the state agency responsible for regulating the insurance industry and enforcing insurance laws in Maryland. Its duties include licensing insurers and producers, investigating consumer complaints, and ensuring that insurance companies comply with state regulations. The MIA's overarching goal is to protect Maryland consumers by maintaining a fair and stable insurance market. It does not set premium rates for all insurers, but it does review rates to ensure they are fair and not discriminatory under the Maryland Insurance Code. Question 5. In Maryland, which of the following situations would most likely be considered adverse selection in the context of property insurance? A. An individual with a high-value property chooses to purchase additional flood insurance. B. A person with a home in a low-risk area decides to reduce their coverage. C. A person in a flood-prone area purchases flood insurance after experiencing frequent floods. D. An individual moves to Maryland and purchases a new homeowner's policy immediately. Correct answer. C. A person in a flood-prone area purchases flood insurance after experiencing frequent floods. Explanation. Adverse selection occurs when individuals with higher risks are more likely to purchase insurance than those with lower risks, potentially causing the insurer to face higher than expected claims. In this case, a person in a flood-prone area who only purchases insurance after experiencing frequent floods is a classic example of adverse selection, as they are seeking coverage when they are already a high risk. Insurers try to mitigate adverse selection through underwriting, pricing, and other techniques to ensure a balance between high-risk and low-risk policyholders. Question 6. Under Maryland law, how much notice must an insurer provide to a policyholder before canceling a homeowner's insurance policy for non-payment of premium? A. 10 days. B. 15 days. C. 30 days. D. 45 days. Correct answer: A. 10 days. Explanation: in Maryland, insurers are required to give policyholders at least 10 days' notice before canceling a homeowner's insurance policy due to non-payment of premium. This rule is outlined in the Maryland Insurance Code, which governs insurance policies in the state. For other reasons, such as underwriting issues, insurers may be required to provide a longer notice period, typically 30 to 45 days, depending on the circumstances. This ensures that consumers have adequate time to address the payment issue before losing coverage. Question 7. A Maryland homeowner suffers a direct loss when their house burns down due to an electrical fire. Which of the following would most likely be covered under a standard homeowner's policy? A. The cost to rebuild the home and replace personal belongings. B. Losses due to emotional distress caused by the fire. C. The depreciation value of the house due to previous wear and tear. D. Legal expenses from a negligence lawsuit filed by the homeowner's neighbor. Correct answer: A. The cost to rebuild the home and replace personal belongings. Explanation: under a standard Maryland homeowners insurance policy, coverage is provided for direct losses caused by perils such as fire. This typically includes the cost to rebuild the home and replace personal belongings that were damaged or destroyed. Emotional distress and depreciation due to wear and tear are generally not covered, as insurance policies are designed to indemnify the policyholder for actual physical losses, not emotional damages. Legal expenses from a negligence lawsuit may be covered under the policy's liability section if the policyholder is found legally responsible for damages to third parties. Question 8. Mr. Wallace, a Maryland resident, was involved in an auto accident where the other driver was uninsured. He seeks compensation for his injuries through his personal auto policy, PAT. What coverage is most likely to apply in this situation? A. Collision coverage. B. Bodily injury liability coverage. C. Uninsured motorist coverage. D. Comprehensive coverage. Correct answer: C. Uninsured motorist coverage. Explanation: uninsured motorist coverage in Maryland is designed to provide protection to the policyholder if they are injured in an accident caused by an uninsured driver. This coverage can compensate for bodily injury and, in some cases, property damage. Collision coverage applies to damages to the policyholder's own vehicle regardless of fault, while bodily injury liability and comprehensive coverage apply in different scenarios, i.e., if the policyholder causes an accident or suffers from non-collision related damages like theft. Question 9. In Maryland, how does a Fair Access to Insurance Requirements FAIR plan assist homeowners? A. It offers insurance policies with lower premiums to all Maryland homeowners. B. It provides insurance coverage to homeowners who are unable to obtain it through the voluntary market. C. It covers high-risk properties for a reduced premium. D. It acts as a reinsurance program for Maryland insurance companies. Correct answer: B. It provides insurance coverage to homeowners who are unable to obtain it through the voluntary market. Explanation: the Maryland FAIR plan is a state-mandated program that insures homeowners who are unable to find coverage in the voluntary market, often due to the high risk of their properties, have access to insurance. The FAIR plan is typically the last resort for individuals who have been denied coverage by private insurers offering protection against common perils. It does not offer lower premiums or reduced coverage for high-risk properties, and it does not act as a reinsurance program. Question 10. In Maryland, which of the following deductibles would result in the lowest premium for a standard homeowner's insurance policy? A. $500 deductible. B. $1,000 deductible. C. $1,500 deductible. D. $2,000 deductible. Correct answer: D. $2,000 deductible. Explanation: The deductible is the amount the policyholder must pay out of pocket before the insurer will cover the remaining costs of a claim. In Maryland, as with other states, higher deductibles result in lower premiums because the policyholder assumes more risk. In this case, a $2,000 deductible would result in the lowest premium as it represents the highest out-of-pocket costs before the insurer contributes. Lower deductibles, like $500, mean the insurer will pay more in claims, which results in higher premiums. Question 11. In Maryland, which of the following actions by an insurance agent would be considered unethical and potentially illegal? A. Offering a discount on premiums during the first year of coverage. B. Explaining policy details in plain language to help the client understand. C. Recommending a higher coverage limit based on the client's assets. D. Misrepresenting the terms of a policy to make a sale. Correct answer. D. Misrepresenting the terms of a policy to make a sale. Explanation. In Maryland, it is unethical and illegal for an insurance agent to misrepresent the terms of a policy to induce a sale. Agents must provide honest and accurate information to clients, ensuring that policyholders understand the coverage they are purchasing. Offering discounts, explaining policies clearly, and recommending appropriate coverage based on a client's needs are ethical practices, but misrepresentation violates Maryland's insurance laws and can result in penalties, including license suspension or revocation. Question 12. According to Maryland law, how long is a free look period for life insurance policies, allowing the policyholder to cancel for? A full refund, A. 5 days. B. 10 days. C. 15 days. D. 30 days. Correct answer. B. 10 days. Explanation. In Maryland, life insurance policies typically include a 10-day free look period, during which policyholders can review the policy and cancel it for a full refund of premiums paid if they are not satisfied. This period allows consumers to carefully consider their purchase without financial penalty. Some policies may offer longer periods, but 10 days is the minimum required by Maryland law. Question 13. A Maryland resident is interested in purchasing a flood insurance policy. Which of the following statements is true regarding the availability of flood insurance in Maryland? A. Flood insurance is included in all standard homeowners policies. B. Flood insurance must be purchased through private insurers only. C. Flood insurance is available through the National Flood Insurance Program, NFIP. D. Flood insurance is required by Maryland state law for all homeowners. Correct answer. C. Flood insurance is available through the National Flood Insurance Program, NFIP. Explanation. In Maryland, as in other states, flood insurance is typically not included in standard homeowners policies. Instead, homeowners can purchase flood insurance through the National Flood Insurance Program, NFIP, a federal program designed to help protect against flood damage. It is optional unless required by the mortgage lender, usually for properties in high-risk flood zones. Question 14. What is the minimum amount of bodily injury liability coverage required by Maryland law for auto insurance? A. $15,000 per person, $30,000 per accident. B. $25,000 per person, $50,000 per accident. C. $50,000 per person on $100,000 per accident. D. $100,000 per person, $300,000 per accident. Correct answer. B. $25,000 per person, $50,000 per accident. Explanation. In Maryland, the minimum required bodily injury liability coverage for auto insurance is $25,000 per person and $50,000 per accident. This coverage is mandatory for all drivers and helps pay for injuries that the policyholder causes to other people in an accident. Higher limits can be purchased for additional protection, but this is the state-mandated minimum coverage. Question 15. If a Maryland resident files a claim with their auto insurer under personal injury protection, PIP, what types of expenses are typically covered? A. Only property damage. B. Medical expenses and lost wages. C. Legal fees related to the accident. D. Pain and suffering damages. Correct answer. B. Medical expenses and lost wages. Explanation. In Maryland, personal injury protection PIP coverage is designed to cover medical expenses and lost wages for the policyholder and passengers, regardless of fault in an accident. PIP does not cover property damage, legal fees, or pain and suffering. provides immediate financial assistance to those injured in an accident to help with recovery without needing to determine liability first. Question 16. Under Maryland's insurance laws, when must an insurer provide a written explanation of a claim denial to a policyholder? A. Within 10 days of the claim submission. B. Upon the policyholder's request. C. Automatically whenever a claim is denied. D. Only when the policyholder appeals the denial. Correct answer. C. Automatically whenever a claim is denied. Explanation. In Maryland, insurers are required to provide a written explanation to the policyholder whenever a claim is denied. This explanation must detail the reasons for the denial, including references to the specific policy provisions that were used as the basis for the decision. This transparency ensures that policyholders understand the reason behind a denial and can take appropriate action if necessary, such as appealing the decision or providing additional information. Question 17. If a Maryland homeowner installs a security system in their home, what is the most likely impact on their homeowner's insurance premium? A. No change in premium. B. Premium will increase. C. Premium will decrease. D. Coverage limits will decrease. Correct answer. C. Premium will decrease. Explanation. In Maryland, installing a home security system can typically result in a decrease in homeowners' insurance premiums. This is because security systems reduce the risk of burglary and property damage, making the home a lower risk for the insurer. Many insurers offer discounts for homes with security features such as alarms, surveillance cameras, and monitoring services. Question 18. In Maryland, which of the following events would not be covered under a standard homeowner's insurance policy? A. Damage caused by a kitchen fire. B. Flood damage from a nearby river overflowing. C. Theft of personal property from the home. D. Damage caused by a fallen tree during a storm. Correct answer. B. Flood damage from a nearby river overflowing. Explanation. A standard homeowner's insurance policy in Maryland, as in most states, does not cover flood damage. Flood coverage must be purchased separately, typically through the National Flood Insurance Program, NFIP, or private insurers offering flood insurance. Standard policies do cover events like fire, theft, and storm-related damages, but flooding is excluded unless specifically insured. Question 19. In Maryland, what is the maximum penalty for insurance fraud? A. A fine of up to $10,000. B. Imprisonment for up to 1 year. C. Imprisonment for up to 10 years. A fine of up to $100,000. D. No penalties, as insurance fraud is a civil matter only. Correct answer. C. Imprisonment for up to 10 years and a fine of up to $100,000. Explanation. In Maryland, insurance fraud is a serious criminal offense that can result in penalties of up to 10 years in prison and fines of up to $100,000. Insurance fraud includes activities such as submitting false claims or providing inaccurate information to obtain insurance benefits. Maryland law treats insurance fraud as a felony, and convicted individuals may face both imprisonment and significant financial penalties. Question 20. Which of the following types of insurance is mandatory for employers in Maryland? A. Life insurance for all employees. B. Workers' compensation insurance. C. Disability insurance. D. Health insurance for part-time employees. Correct answer. B. Workers' compensation insurance. Explanation. In Maryland, employers are required by law to provide workers' compensation insurance for their employees. This coverage provides benefits to workers who are injured or become ill as a result of their job. It covers medical expenses, lost wages, and rehabilitation costs. Life insurance and disability insurance are optional for employers, while health insurance requirements depend on the size of the employer but are not mandatory for part-time employees. Question 21. In Maryland, how long does an insured have to report a loss to their insurer after an incident? In most standard homeowners insurance policies, A. 7 days. B. 30 days. C. A reasonable time, generally within 60 days. D. 90 days. Correct answer. C. A reasonable time, generally within 60 days. Explanation. In Maryland, most standard homeowners insurance policies require the insured to report a loss to the insurer within a reasonable time, which is generally understood to be within 60 days. Reporting a loss promptly is important to ensure the insurer can investigate and process the claim efficiently. Failing to report within this period could result in a denial of the claim depending on the policy terms. Question 22. What is the required minimum uninsured motorist coverage for auto insurance in Maryland? A. $25,000 per person, $50,000 per accident. B. $15,000 per person, $30,000 per accident. C. $50,000 per person on $100,000 per accident. D. $100,000 per person, $300,000 per accident. Correct answer: A. $25,000 per person, $50,000 per accident. Explanation: Maryland law mandates that all auto insurance policies include uninsured motorist coverage with minimum limits of $25,000 per person and $50,000 per accident. This coverage protects drivers if they are involved in an accident with a motorist who does not have insurance or has insufficient insurance. It ensures that the injured party can recover damages for bodily injury even if the at-fault driver cannot pay. Question 23. In Maryland, which of the following is not a valid reason for an auto insurance company to cancel or non-renew a policy? A. The policyholder's driver's license has been suspended. B. The policyholder has filed multiple claims within a year. C. The policyholder is involved in a not-at-fault accident. D. The policyholder failed to pay their premium. Correct answer: C. The policyholder is involved in a not-at-fault accident. Explanation: In Maryland, insurance companies are prohibited from canceling or non-renewing an auto insurance policy solely because the policyholder was involved in a not-at-fault accident. Valid reasons for cancellation or non-renewal include failure to pay premiums, license suspension, or a history of excessive claims, but a not-at-fault accident should not negatively impact the insured's coverage. Question 24. How does Maryland law protect homeowners in the event of a hurricane or windstorm with regard to homeowners insurance deductibles? The homeowners are required to pay the standard deductible regardless of storm severity. B. Maryland law limits hurricane deductibles to specific storm categories. C. Maryland law prohibits any separate hurricane deductibles. D. Hurricane deductibles are only applied if wind speeds exceed 100 miles per hour. Correct answer: B. Maryland law limits hurricane deductibles to specific storm categories. Explanation: In Maryland, insurers are allowed to apply hurricane deductibles only if the storm reaches a certain intensity, typically a Category 2 hurricane or higher. This law ensures that homeowners are not subject to higher out-of-pocket costs for minor storms. The deductible typically applies only to wind-related damage caused by qualifying hurricanes. Question 25. When must a Maryland insurance agent complete continuing education? C. Requirements to maintain their license. A. Every 2 years. B. Every 3 years. C. Every year. D. Every 4 years. Correct answer: A. Every 2 years. Explanation: In Maryland, licensed insurance agents must complete continuing education. C. Requirements every 2 years to maintain their license. The required hours and specific topics may vary based on the type of license, but this regular education helps ensure that agents remain knowledgeable about changing laws, regulations, and best practices in the industry. Question 26. What is the maximum period an insurer in Maryland can backdate a cancellation of an auto insurance policy? A. 10 days. B. 30 days. C. 45 days. D. 60 days. Correct answer: B. 30 days. Explanation: In Maryland, an insurer can backdate the cancellation of an auto insurance policy for up to 30 days, typically for non-payment of premiums. After 30 days, the insurer is required to issue a notice of cancellation, and the policy remains in effect until the stated cancellation date. Insurers must comply with these time frames to protect policyholders from being unfairly dropped without proper notice. Question 27. If a Maryland policyholder elects to purchase optional comprehensive coverage for their vehicle, which of the following would be covered? A. Collision with another vehicle. B. Damage from a hailstorm. C. Damage caused by driving over a pothole. D. Damage to another vehicle in an accident. Correct answer: B. Damage from a hailstorm. Explanation. In Maryland, comprehensive coverage on an auto insurance policy covers damages to the insured vehicle caused by non-collision events such as natural disasters, theft, vandalism, and hailstorms. Collision coverage, on the other hand, covers accidents involving other vehicles or objects. Comprehensive coverage is optional but can provide valuable protection for a wide range of damage types. Question 28. Which of the following is true regarding credit scoring and insurance premiums in Maryland? A. Insurers in Maryland are prohibited from using credit scores to determine premiums. B. Credit scores can be used, but only for new policies, not renewals. C. Insurers can use credit scores, but Maryland law regulates how they can impact premiums. D. Insurers are allowed to base premiums entirely on credit scores. Correct answer. C. Insurers can use credit scores, but Maryland law regulates how they can impact premiums. Explanation. In Maryland, insurers are allowed to consider credit scores when determining premiums, but state law imposes regulations on how these scores can be used. For instance, insurers cannot base premium decisions solely on credit scores and must follow certain guidelines to ensure fairness. Maryland is among the states that balance the use of credit with consumer protections. Question 29. Which of the following disability insurance benefits is taxable under Maryland law? A. Benefits paid from an employer-funded policy. B. Benefits paid from a privately purchased individual policy. C. Benefits paid for a short-term disability policy. D. Benefits from a long-term disability policy if premiums were paid by the employee. Correct answer. A. Benefits paid from an employer-funded policy. Explanation. Under Maryland law, disability insurance benefits are taxable if the premiums were paid by the employer. This is because the premiums were not paid with after-tax income, so the benefits become taxable when received. Conversely, if the individual paid for the policy with after-tax income, such as in a privately purchased policy or a policy where the employee pays the premiums, the benefits are generally tax-free. Question 30. In Maryland, what is the maximum allowable limit for personal injury protection PIP under an auto insurance policy? A. $2,500. B. $5,000. C. $10,000. D. $15,000. Correct answer. C. $10,000. Explanation. In Maryland, the maximum allowable limit for personal injury protection PIP coverage is $10,000. PIP provides coverage for medical expenses, lost wages, and other costs resulting from an auto accident, regardless of fault. While $2,500 is the standard minimum, policyholders can elect to increase this coverage to the higher limit of $10,000 for added protection. Question 31. In Maryland, what is the waiting period for short-term disability benefits to begin after an individual becomes disabled? A. 7 days. B. 14 days. C. 30 days. D. 60 days. Correct answer. A. 7 days. Explanation. In Maryland, many short-term disability insurance policies have a waiting period of 7 days before benefits begin. This means that if an individual becomes disabled, they must wait for a week before they start receiving benefits. The waiting period can vary depending on the policy, but 7 days is a common standard. Question 32. Under Maryland law, what is the primary purpose of the Maryland Insurance Administration? A. To set insurance premiums. B. To provide insurance coverage to residents. C. To regulate the insurance industry and protect consumers. D. To sell insurance policies. Correct answer. C. To regulate the insurance industry and protect consumers. Explanation. The Maryland Insurance Administration is responsible for regulating the insurance industry within the state. Its primary purpose is to ensure that consumers are treated fairly, that insurance companies operate within the law, and that the insurance marketplace remains competitive. This includes overseeing insurance rates, investigating complaints, and enforcing compliance with state regulations. Question 33. Which of the following types of insurance is mandatory for drivers in Maryland? A. Collision insurance. B. Comprehensive insurance. C. Liability insurance. D. Uninsured motorist insurance. Correct answer. C. Liability insurance. Explanation. In Maryland, liability insurance is mandatory for all drivers. This insurance covers damages to other people and property if the insured driver is at fault in an accident. Maryland requires minimum liability limits of $30,000 per person and $60,000 per accident for bodily injury, as well as $15,000 for property damage. Question 34. What is the maximum fine for a driver in Maryland found operating a vehicle without the required insurance coverage? A. $500. B. $1,000. C. $1,500. D. $2,500. Correct answer. B. $1,000. Explanation. In Maryland, a driver found operating a vehicle without the required insurance coverage can face a maximum fine of $1,000. In addition to the fine, the driver may also be subject to other penalties, such as points on their driving record or the suspension of their driving privileges, depending on the severity of the violation. Question 35. In Maryland, which of the following is true regarding health insurance policies that cover mental health services? They are not required to cover mental health services. B. They must offer mental health coverage at the same level as physical health coverage. C. They can limit mental health coverage to a maximum of 10 visits per year. D. They are only required to cover inpatient mental health treatment. Correct answer. B. They must offer mental health coverage at the same level as physical health coverage. Explanation. Maryland law requires that health insurance policies providing coverage for mental health services must do so at the same level as they provide for physical health services. This is in compliance with federal mental health parity laws, which mandate equal treatment of mental health and substance use disorder benefits compared to medical and surgical benefits. Question 36. What is the term used in Maryland for insurance companies that provide coverage for high-risk drivers? A. Standard insurers. B. Admitted insurers. C. Non-standard insurers. D. Surplus lines insurers. Correct answer. C. Non-standard insurers. Explanation. In Maryland, non-standard insurers refer to companies that provide coverage for high-risk drivers who may not qualify for standard insurance policies due to factors like poor driving records or multiple claims. These insurers specialize in covering individuals who are typically deemed too risky by standard providers. Question 37. In Maryland, how often must a commercial insurance policy be reviewed to ensure compliance with current regulations and adequate coverage? A. Annually. B. Every 2 years. C. Every 3 years. D. Every 5 years. Correct answer. A. Annually. Explanation. Maryland law suggests that businesses should review their commercial insurance policies annually to ensure compliance with current regulations and that coverage remains adequate for their needs. Regular reviews help identify any gaps in coverage and ensure that the policy reflects any changes in business operations or regulations. Question 38. What is the maximum liability coverage requirement for bodily injury under Maryland's Maryland Automobile Insurance Fund? They $15,000 per person, $30,000 per accident. B. $25,000 per person, $50,000 per accident. C. $30,000 per person, $60,000 per accident. D. $50,000 per person, $100,000 per accident. Correct answer. C. $30,000 per person, $60,000 per accident. Explanation. The Maryland Automobile Insurance Fund, MAIF, which provides insurance to high-risk drivers who are unable to obtain coverage through standard insurers, requires minimum bodily injury liability coverage of $30,000 per person and $60,000 per accident. This requirement is in place to ensure that drivers have sufficient coverage to compensate others in the event of an accident. Question 39. In Maryland, what type of coverage can a homeowner add to their policy to protect against damages from earthquakes? A. Flood insurance. B. Earthquake endorsement. C. Comprehensive coverage. D. Basic policy coverage. Correct answer. B. Earthquake endorsement. Explanation. Homeowners in Maryland can add an earthquake endorsement to their homeowner's insurance policy to protect against damages caused by earthquakes. Standard homeowners insurance typically does not cover earthquake damage, so the endorsement provides essential protection for homeowners in areas where seismic activity may occur. Question 40. In Maryland, what is the minimum coverage limit for property damage liability insurance required for drivers? A. $10,000. B. $15,000. C. $20,000. D. $25,000. Correct answer. B. $15,000. Explanation. Maryland requires a minimum property damage liability insurance limit of $15,000. This coverage pays for damage caused by the insured driver to another person's property in the event of an accident where they are found to be at fault. Meeting this minimum ensures compliance with state law and provides some level of financial protection to other property owners. Question 41. In Maryland, what is the primary purpose of the Health Insurance Portability and Accountability Act? A. To mandate insurance premiums. B. To protect patients' medical records and personal health information. C. To establish minimum insurance coverage requirements. D. To regulate the insurance market. Correct answer. B. To protect patients' medical records and personal health information. Explanation. The Health Insurance Portability and Accountability Act, HIPAA, primarily aims to protect the privacy and security of individuals' medical records and personal health information. It establishes national standards for the protection of health information, ensuring that healthcare providers, insurers, and others who handle health data maintain its confidentiality. Question 42. What is the maximum amount of uninsured motorist coverage that a driver in Maryland is required to have? A. $30,000. B. $50,000. C. $60,000. D. There is no maximum. Correct answer. D. There is no maximum. Explanation. In Maryland, while there are minimum coverage requirements for uninsured motorist coverage, there is no maximum limit imposed by the state. Drivers can choose to carry higher limits based on their personal circumstances and risk tolerance. The minimum required limit is $30,000 per person and $60,000 per accident. Question 43. Which of the following types of insurance policies is designed specifically for small businesses in Maryland? A. Personal auto insurance. B. Business owner's policy, BOP. C. Workers' compensation insurance. D. Term life insurance. Correct answer. B. Business owner's policy, BOP. Explanation. A business owner's policy, BOP, is specifically designed for small businesses in Maryland. It typically combines general liability insurance, property insurance, and business interruption insurance into one package, offering a comprehensive solution tailored to the needs of small business owners. Question 44. In Maryland, what is the primary benefit of obtaining flood insurance through the National Flood Insurance Program, NFIP? A. It is cheaper than standard homeowners insurance. B. It covers damage to vehicles during a flood. C. It provides coverage for flood-related losses not typically covered by homeowners insurance. D. It is required by law for all property owners. Correct answer. C. It provides coverage for flood-related losses not typically covered by homeowners insurance. Explanation. The National Flood Insurance Program, NFIP, provides coverage for flood-related losses that standard homeowners insurance policies typically do not cover. Given Maryland's susceptibility to flooding, obtaining NFIP flood insurance can help protect property owners from significant financial losses due to flood damage. Question 45. What is the waiting period for workers' compensation benefits to begin after an injury occurs in Maryland? A. 3 days. B. 7 days. C. 14 days. D. 21 days. Correct answer. A. 3 days. Explanation. In Maryland, workers' compensation benefits typically begin after a waiting period of 3 days following an injury. If the employee is unable to work for more than 14 days due to the injury, they can receive benefits retroactively for the initial 3 days. This waiting period ensures that only significant injuries warrant compensation. Question 46. In Maryland, if a policyholder cancels their homeowner's insurance, how long does the insurance company have to return any unearned premium? A. 10 days. B. 30 days. C. 60 days. D. 90 days. Correct answer. B. 30 days. Explanation. Maryland law requires insurance companies to return any unearned premium within 30 days after the cancellation of a homeowner's insurance policy. This protects consumers by ensuring they receive a timely refund for the portion of their premium that corresponds to the canceled coverage. Question 47. Which of the following must a Maryland resident provide when applying for Medicaid? A. Social Security number. B. Proof of income. C. Identification documents. D. All of the above. Correct answer. D. All of the above. Explanation. When applying for Medicaid in Maryland, residents must provide a variety of documents, including their Social Security number, proof of income, and other identification documents. This information helps determine eligibility for the program based on income and other factors. Question 40. In Maryland, what is the statute of limitations for filing a claim for property damage resulting from an auto accident? A. 1 year. B. 2 years. C. 3 years. D. 5 years. Correct answer. B. 3 years. Explanation. The statute of limitations for filing a claim for property damage resulting from an auto accident in Maryland is 3 years. This means that a claimant must file their lawsuit within 3 years of the accident date to seek compensation for damages. Question 49. What is the purpose of the Maryland Insurance Fraud Division? A. To provide insurance coverage to low-income residents. B. To investigate and prevent insurance fraud. C. To regulate insurance premiums. D. To assist consumers in purchasing insurance. Correct answer. B. To investigate and prevent insurance fraud. Explanation. The Maryland Insurance Fraud Division is tasked with investigating and preventing insurance fraud. It works to protect consumers and the integrity of the insurance market by identifying fraudulent activities and enforcing laws against those who commit fraud. Question 50. What is the required minimum coverage for bodily injury per person in Maryland's auto insurance policies? A. $15,000. B. $25,000. C. $30,000. D. $50,000. Correct answer. C. $30,000. Explanation. In Maryland, the minimum required coverage for bodily injury is $30,000 per person. This coverage is part of the liability insurance that drivers must carry to protect against injuries caused to other individuals in an accident where they are at fault. Correct answer. C. Flood damage. Explanation. A standard homeowner's insurance policy typically does not cover flood damage. Homeowners in Maryland need to purchase a separate flood insurance policy through the National Flood Insurance Program, NFIP, to cover losses due to flooding. Question 52. What is the primary purpose of the Maryland Automobile Insurance Fund, MAIF? A. To provide health insurance to low-income individuals. B. To offer auto insurance to high-risk drivers. C. To fund insurance fraud investigations. D. To regulate insurance companies. Correct answer. B. To offer auto insurance to high-risk drivers. Explanation. The Maryland Automobile Insurance Fund, MAIF, provides auto insurance to individuals who are unable to obtain coverage through the traditional insurance market, particularly high-risk drivers. It aims to ensure that all Maryland residents have access to necessary auto insurance. Question 53. In Maryland, what is the minimum required coverage for property damage liability in auto insurance policies? A. $15,000. B. $25,000. C. $30,000. D. $50,000. Correct answer. A. $15,000. Explanation. The minimum required coverage for property damage liability in Maryland auto insurance policies is $15,000. This coverage helps pay for damages to another person's property resulting from an accident caused by the insured driver. Question 54. What is the maximum penalty for a first offense of driving without insurance in Maryland? A. $1,000. B. $2,500. C. $5,000. D. $10,000. Correct answer. A. $1,000. Explanation. In Maryland, the maximum penalty for a first offense of driving without insurance is $1,000. This can include fines and additional penalties such as points on the driver's license and possible suspension of driving privileges. Question 55. Which of the following statements regarding Medicare in Maryland is true? A. It is only available for low-income residents. B. It covers all healthcare expenses without limits. C. It provides health coverage primarily for individuals aged 65 and older. D. It requires no premiums or out-of-pocket costs. Correct answer. C. It provides health coverage primarily for individuals aged 65 and older. Explanation. Medicare is a federal health insurance program that primarily provides coverage for individuals aged 65 and older, as well as some younger individuals with disabilities. While it covers a significant portion of healthcare costs, it does involve premiums and out-of-pocket expenses. Question 56. In Maryland, what is the role of the Maryland Insurance Administration? A. To provide insurance policies to residents. B. To regulate and oversee insurance companies and protect consumers. C. To handle claims for insurance companies. D. To sell insurance directly to consumers. Correct answer. B. To regulate and oversee insurance companies and protect consumers. Explanation. The Maryland Insurance Administration is responsible for regulating and overseeing the insurance industry in Maryland. Its primary role includes ensuring that insurance companies comply with state laws and regulations, as well as protecting consumer rights. Question 57. What type of insurance provides coverage for injuries sustained by employees while on the job in Maryland? A. General liability insurance. B. Workers' compensation insurance. C. Personal injury insurance. D. Health insurance. Correct answer. B. Workers' compensation insurance. Explanation. Workers' compensation insurance is specifically designed to provide coverage for injuries sustained by employees while on the job in Maryland. It covers medical expenses and provides wage replacement for injured workers, ensuring they receive appropriate care and compensation. Question 58. In Maryland, what is the minimum age at which a person can legally obtain a driver's license without restrictions? A. 16. B. 18. C. 21. D. 25. Correct answer. B. 18. Explanation. In Maryland, individuals can legally obtain a full, unrestricted driver's license at the age of 18. However, they may obtain a provisional license at age 16, which comes with certain restrictions until they reach 18. Question 59. Under Maryland law, which of the following is considered a mandatory disclosure when selling a home? A. The seller's financial status. B. Previous insurance claims on the property. C. The age of the roof. D. The buyer's mortgage options. Correct answer. B. Previous insurance claims on the property. Explanation. Under Maryland law, sellers are required to disclose previous insurance claims on the property. This transparency helps buyers understand potential issues related to the property that could affect their decision to purchase. Question 60. In Maryland, if a driver is involved in an accident and is found to be 50% at fault, what effect does this have on their ability to recover damages? They cannot recover any damages. B. They can recover full damages. C. They can recover reduced damages based on their percentage of fault. D. They can recover damages without regard to fault. Correct answer. C. They can recover reduced damages based on their percentage of fault. Explanation. Maryland follows the contributory negligence rule, which means that if a driver is found to be 50% at fault in an accident, they can only recover damages reduced by that percentage. However, if they are found to be more than 50% at fault, they cannot recover any damages. Question 61. Which of the following is not a requirement for an individual to obtain a Maryland property insurance producer license? A. Passing a state licensing exam. B. Submitting to a criminal background check. C. Completing pre-licensing education. D. Providing proof of previous insurance experience. Correct answer. D. Providing proof of previous insurance experience. Explanation. To obtain a Maryland property insurance producer license, an individual must pass a state licensing exam, complete pre-licensing education, and submit to a criminal background check. However, previous insurance experience is not a requirement for a licensure. Question 62. In Maryland, coinsurance and property insurance is designed to A. Guarantee full reimbursement for any loss. B. Limit the insurer's liability by requiring the insured to bear part of the loss. C. Eliminate the need for a deductible. D. Provide extra coverage for high-value items. Correct answer. B. Limit the insurer's liability by requiring the insured to bear part of the loss. Explanation. Coinsurances, a provision in property insurance policies that requires the insured to carry a minimum amount of insurance based on a percentage of the property's value. In the event of a loss, if the insured fails to meet this requirement, they must bear part of the loss. This limits the insurer's liability. Question 63. Mr. Harrison, a Maryland resident, experienced a loss when his commercial building was damaged by fire. His policy had an 80% coinsurance clause, and the building was insured for $800,000, while its value was $1,200,000. The total loss was $300,000. How much will Mr. Harrison recover from his insurer? A. $200,000. B. $240,000. C. $280,000. D. $300,000. Correct answer. B. $240,000. Explanation. Under the coinsurance clause, Mr. Harrison is required to insure 80% of the building's value, which is $960,000, 80% of $1,200,000. Since he insured the building for only $800,000, he did not meet the coinsurance requirement. The formula for calculating the insurer's liability is. Question 64. In Maryland, what is the role of the Fair Access to Insurance Requirements FAIR Plan? A. To provide discounted insurance premiums to low-income families. B. To provide auto insurance to high-risk drivers. C. To make property insurance available to those in high-risk areas. D. To oversee claims settlements between insurers and policyholders. Correct answer. C. To make property insurance available to those in high-risk areas. Explanation. The FAIR plan in Maryland ensures that individuals in high-risk areas, who may otherwise be unable to obtain property insurance in the regular market, have access to coverage. This helps protect property owners in areas prone to risks such as crime or natural disasters. Question 65. In Maryland, when is a producer's license renewal application due? A. On the producer's birthday. B. 30 days before the expiration date of the license. C. 60 days before the expiration date of the license. D. At the end of the calendar year. Correct answer. B. 30 days before the expiration date of the license. Explanation. A Maryland insurance producer must submit their license renewal application 30 days before the expiration date of their current license. Timely renewal is essential to maintain licensure and avoid lapses in the ability to legally sell insurance. Question 66. In a Maryland homeowner's policy, which of the following is generally considered an exclusion under the Section I property coverage? A. Fire damage. B. Theft of personal property. C. Earthquake damage. D. Windstorm damage. Correct answer. C. Earthquake damage. Explanation. Earthquake damage is typically excluded from standard Maryland homeowners insurance policies under Section I property coverage. To be covered for earthquake damage, the homeowner would need to purchase a separate earthquake endorsement. Question 67. In Maryland, vicarious liability refers to a liability transferred to another party through a contract. B. Liability imposed on a business for its employees' actions. C. Liability that occurs only when negligence is proven. D. Liability shared equally between multiple parties. Correct answer. B. Liability imposed on a business for its employees' actions. Explanation. Vicarious liability in Maryland means that an employer can be held liable for the negligent actions of its employees when those actions are performed within the scope of their employment. This principle holds employers accountable for the conduct of their employees. Question 68. What is the purpose of the USAPATR-IOT Act as it relates to the insurance industry in Maryland? A. To regulate insurance rates. B. To prevent money laundering and financing of terrorism. C. To provide health insurance subsidies. D. To establish insurance fraud task forces. Correct answer. B. To prevent money laundering and financing of terrorism. Explanation. The USAPATRIOT Act imposes anti-money laundering requirements on financial institutions, including insurers. In Maryland, insurance companies must develop policies and procedures to detect and report suspicious transactions that could involve money laundering or the financing of terrorism. Question 69. In Maryland, the pro rata liability clause in property insurance A. limits the amount of coverage based on the insured's income. B. ensures that each insurance policy covering the same loss pays a proportionate share. C. requires the insured to carry a specific minimum amount of insurance. D. eliminates the need for deductibles. Correct answer. B. ensures that each insurance policy covering the same loss pays a proportionate share. Explanation. The pro rata liability clause is designed to prevent the insured from receiving more than the actual loss amount when multiple insurance policies cover the same property. Each policy will pay a proportionate share of the loss based on the limits of coverage. Question 70. Which of the following is true about the Maryland Unfair Trade Practices Act? A. It only applies to health insurance policies. B. It allows for the denial of claims without reason. C. It prohibits misrepresentation and unfair discrimination by insurers. D. It encourages price fixing among insurance companies. Correct answer. C. It prohibits misrepresentation and unfair discrimination by insurers. Explanation. The Maryland Unfair Trade Practices Act prohibits insurers from engaging in practices such as misrepresentation of policy terms, unfair discrimination, and coercion. It ensures that consumers are treated fairly and that the insurance market operates with integrity. Question 71. In Maryland, a homeowner's policy that includes replacement cost coverage will pay A. the market value of the property at the time of loss. B. the original purchase price of the property. C. the cost to replace damaged property with new materials of like kind and quality without deduction for depreciation. D. the actual cash value minus depreciation. Correct answer. C. the cost to replace damaged property with new materials of like kind and quality without deduction for depreciation. Explanation. Replacement cost coverage pays for the cost to replace damaged property with new materials of similar kind and quality without deducting for depreciation. This differs from actual cash value coverage, which does account for depreciation. Question 72. In Maryland, under the Maryland Insurance Fraud Act, which of the following actions could be considered insurance fraud? A. failing to report a minor accident. B. exaggerating the value of stolen property in an insurance claim. C. choosing a higher deductible to lower insurance premiums. D. filing a claim after a natural disaster. Correct answer. B. exaggerating the value of stolen property in an insurance claim. Explanation. Under the Maryland Insurance Fraud Act, knowingly providing false information or exaggerating the value of a loss in an insurance claim is considered fraud. Penalties for insurance fraud can include fines, imprisonment, and denial of coverage. Question 73. If a Maryland homeowner experiences a loss due to a fire and they have a standard homeowner's insurance policy, which of the following would not be covered? A. damage to personal property. B. temporary living expenses while the home is being repaired. C. smoke damage to the structure. D. maintenance-related damage such as mold from poor ventilation. Correct answer. D. maintenance-related damage such as mold from poor ventilation. Explanation. Homeowners insurance typically does not cover losses related to lack of maintenance or normal wear and tear. Mold caused by poor ventilation or negligence is usually excluded from coverage, while damage from a fire, including smoke damage, is covered. Question 74. In Maryland, which of the following is required to sell flood insurance under the National Flood Insurance Program, NFIP? A special flood insurance license. B. a property and casualty insurance producer license. C. certification from FEMA. D. a separate bond. Correct answer. B. a property and casualty insurance producer license. Explanation. To sell flood insurance under the National Flood Insurance Program, NFIP, in Maryland, an insurance agent must hold a valid property and casualty insurance producer license. There is no requirement for a separate flood insurance license. Question 75. In Maryland, how is the actual cash value of a property calculated in a homeowner's insurance policy? A, market value minus mortgage balance. B, replacement cost minus depreciation. C, replacement cost plus appreciation. D, assessed value plus improvements. Correct answer. B, replacement cost minus depreciation. Explanation. The actual cash value, ACV, in a Maryland homeowner's insurance policy is calculated as the replacement cost of the damaged property minus depreciation. This method accounts for the age and condition of the property at the time of loss. Question 76. A Maryland insurance producer must notify the Maryland Insurance Administration, MIA, of any change in their legal name or address within A, 10 days, B, 30 days, C, 45 days, D, 60 days. Correct answer. B, 30 days. Explanation. A licensed Maryland insurance producer is required to notify the Maryland Insurance Administration, MIA, of any change in their legal name or address within 30 days. Failure to do so may result in penalties or suspension of the producer's license. Question 77. Which of the following perils is typically excluded from a standard Maryland homeowner's insurance policy? A, theft, B, fire, C, flood, D, hail. Correct answer. C, flood. Explanation. Flood damage is typically excluded from a standard Maryland homeowner's insurance policy. To obtain coverage for floods, a homeowner must purchase a separate flood insurance policy, often through the National Flood Insurance Program, NFIP. Question 78. In Maryland, what is the maximum period for which the Maryland Insurance Administration, MIA, can suspend an insurance producer's license for engaging in unfair trade practices? A, 1 year. B, 3 years. C, 6 months. D, indefinitely at the discretion of the Commissioner. Correct answer. D, indefinitely at the discretion of the Commissioner. Explanation. The Maryland Insurance Administration, MIA, has the authority to suspend an insurance producer's license indefinitely if they are found guilty of engaging in unfair trade practices or violating state insurance laws. The duration is determined by the Commissioner based on the severity of the violation. Question 79. Which of the following is true regarding subrogation in a Maryland property insurance policy? A, it allows the insured to recover twice for the same loss. B, it prevents the insurer from pursuing legal action against a negligent third party. C, it allows the insurer to pursue reimbursement from a responsible third party after compensating the insured. D, it limits the amount an insured can claim. Correct answer. C, it allows the insurer to pursue reimbursement from a responsible third party after compensating the insured. Explanation. Subrogation in a Maryland property insurance policy allows the insurer to seek reimbursement from a third party responsible for causing a loss after the insurer has compensated the insured. This ensures that the responsible party ultimately pays for the damages. Question 80. Under Maryland law, what is the standard deductible for a homeowner's insurance policy for a windstorm or hail loss? A, $500. B, $1,000. C, 2% of the dwelling coverage limit. D, there is no standard deductible for windstorm or hail losses. Correct answer. C, 2% of the dwelling coverage limit. Explanation. In Maryland, many homeowners' insurance policies include a 2% deductible of the dwelling coverage limit for losses due to windstorms or hail. This percentage-based deductible can vary depending on the insurer and the policy. Question 81. In Maryland, a homeowner's insurance policy that includes personal liability coverage would typically cover which of the following incidents? A, your dog bites your neighbor and they sue you for medical expenses. B, damage to your home caused by a leaking roof. C, water damage due to a flood. D, structural damage to your house caused by an earthquake. Correct answer. A, your dog bites your neighbor and they sue you for medical expenses. Explanation. Personal liability coverage under a homeowner's policy in Maryland typically covers legal expenses and damages if the policyholder is held responsible for causing bodily injury or property damage to someone else, such as a dog bite incident. Flood and earthquake damage generally require separate policies. Question 82. If a Maryland homeowner has a mortgage, which type of homeowner's insurance coverage is the mortgage lender most likely to require? A. Earthquake insurance. B. Flood insurance. C. Hazard insurance covering the structure. D. Liability insurance only. Correct answer. C. Hazard insurance covering the structure. Explanation. Mortgage lenders in Maryland generally require homeowners to carry hazard insurance that covers the structure, dwelling, to protect the lender's investment. This ensures that the home can be rebuilt or repaired if damaged by covered perils like fire or windstorms. Question 83. Under Maryland law, when can an insurer cancel a homeowner's insurance policy after it has been in force for 45 days? A. Only if the homeowner files a claim. B. For any reason at all. C. For reasons such as non-payment of premium, fraud, or an increase in risk. D. At the discretion of the insurance agent. Correct answer. C. For reasons such as non-payment of premium, fraud, or an increase in risk. Explanation. In Maryland, after a homeowner's insurance policy has been in force for 45 days, the insurer may cancel it for specific reasons like non-payment of premium, fraud, or a substantial increase in risk. General cancellation for any reason is not permitted after this period. Question 84. Which of the following is true regarding Maryland's Insurance Guarantee Association? A. It provides coverage for property damage due to floods. B. It helps protect policyholders in the event of an insurer's insolvency. C. It guarantees premium refunds for policyholders. D. It regulates insurance rates in Maryland. Correct answer. B. It helps protect policyholders in the event of an insurer's insolvency. Explanation. The Maryland Insurance Guarantee Association provides protection to policyholders if their insurance company becomes insolvent. It ensures that claims are paid up to certain limits, even if the insurer can no longer meet its financial obligations. Question 85. In Maryland, loss of use coverage under a homeowner's insurance policy will typically cover A. Damage to landscaping caused by a windstorm. B. The cost of renting a temporary home while your house is being repaired after a covered loss. C. The replacement of personal belongings after a fire. D. Medical expenses for a guest injured on your property. Correct answer. B. The cost of renting a temporary home while your house is being repaired after covered loss. Explanation. Loss of use coverage pays for additional living expenses such as the cost of renting a temporary home when the insured's property is uninhabitable due to a covered loss like a fire. It does not cover property damage or medical expenses. Question 86. Which of the following is not covered by a standard homeowner's insurance policy in Maryland? A. Vandalism to your home. B. Theft of personal property. C. Liability for injury to guests on your property. D. Damage from underground water seepage. Correct answer. D. Damage from underground water seepage. Explanation. Standard homeowners insurance policies in Maryland typically exclude damage caused by underground water seepage, as this is considered a maintenance issue rather than a sudden and accidental event. Vandalism, theft, and personal liability are typically covered. Question 87. Under Maryland law, an insurance company must provide how many days' notice before non-renewing a homeowner's insurance policy? A. 15 days. B. 30 days. C. 45 days. D. 60 days. Correct answer. D. 60 days. Explanation. Maryland law requires insurers to give policyholders at least 60 days notice before non-renewing a homeowner's insurance policy. This allows the policyholder sufficient time to find alternative coverage if needed. Question 88. A homeowner's insurance policy in Maryland generally covers which of the following? A. Damage caused by earthquakes. B. Damage caused by a burst pipe that floods the home. C. Termite damage to wooden structures. D. Damage to a detached garage caused by normal wear and tear. Correct answer. B. Damage caused by a burst pipe that floods the home. Explanation. A burst pipe causing water damage is typically covered by a standard homeowner's insurance policy in Maryland. However, earthquakes, termite damage, and wear and tear are usually excluded or require separate coverage. Question 89. Which of the following types of water damage is generally excluded from a standard Maryland homeowner's insurance policy? A. Damage from a burst pipe. B. Damage from rain entering through a storm-damaged roof. C. Damage from rising floodwaters. D. Damage from a leaking water heater. Correct answer. C. Damage from rising floodwaters. Explanation. Flood damage caused by rising water is excluded from standard homeowners insurance policies in Maryland. To cover this risk, homeowners need to purchase a separate flood insurance policy, often through the National Flood Insurance Program, NFIP. Question 90. In Maryland, what is the minimum deductible commonly seen for wind or hurricane damage under a homeowner's insurance policy? A. $100. B. $500. C. 1% of the dwelling's insured value. D. 10% of the claim amount. Correct answer. C. 1% of the dwelling's insured value. Explanation. In Maryland, the deductible for wind or hurricane damage is often expressed as a percentage of the dwelling's insured value, commonly around 1% to 2%, depending on the policy. This percentage-based deductible applies specifically to wind or hurricane-related losses.